The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Hi, folks. We're looking at this hour from 11 o'clock to 12 o'clock. Steve is out, and I said I had so many questions come in. I made this hour free. I needed to go through some of these because sometimes I skip them and it's about 2 days later. Current is what I like. So current is right this very moment. I had a question about ABUS. Did I do that? Sometimes I do these charts during the break. I don't even look at the price or anything. Yes, I've done it. So ABUS is Arbutus. This is Et2 Brutus, Biopharma, and it's trading at, ABUS is the symbol trading at 2.90, up 3 cents. Now, I saw this sometime about 3 to 5 sessions ago. It popped up as a screamer. I didn't do anything with it at that time. I didn't even notate it because it was going sideways in the monthly chart. And at that time in the weekly chart, it was like an arch formation. But yes, this is acting very well. I've got this as a brand new leg B to the upside. It's gone above the left side, right side price time match in the cup formation. And as a result, the breakout needs to hold. Today's high is 293. 305 to 308. If it can even, it just has to touch that once. It doesn't have to even hold it. It just has to touch it to say, you know what? I'm leaving that whole area of the 280s behind for the moment. I'm trying to go further into the threes. That'll be very important. And so leg C in the weekly chart, and that weekly chart is actually starting to improve a lot. Funnily enough, the stochastic and the MACD in the daily and the weekly charts are very similar. The stochastic at 83% made this cup formation. A cup formation. Gone back into the 83%. It was below that. And the weekly has gone to 78%, also in the cup formation, but it should start to improve very quickly if it can actually get to the 3 level. Now, why did I choose 3? Because on the left side, peak D back in July, I think it was July. July, the week of the 15th, hit 285. No, 285 is wrong. 299, and that's the reason why I wanted to clear the twos. It's just going to say, and it's biotech. And if biotech acts as steadily as this, moving in a particular direction where the tide is going up or down, you can see what happens on the weekly chart. In the down move, it's a very quick move to the downside. On the upside, it gets a bit jagged, but it is moving nicely, and therefore it's got to leave at least the 280s alone. It's got to get into the threes. So far, this is very good action. I would just tell you that 279 to 273, that's really key support looking out about, I'd even say a week. All right. Next question came in, and am I in the right place? Yes, I am. So FCX, I'm going to just run through these as I see them. FCX wants to know, what's the question? Should I stay or should I go? Oh, it's one of those, should I stay or should I go, huh? Sounds like a soap opera. Should I stay or should I go? Should I stay or should I go? All right, let me just look at this. I like the action in Freeport McMoran. It is in leg F in the weekly chart. It's bumping up against Chapman Wave inside wedge target resistance line for the last 3 weeks. If you are, I don't know where you got in. If you are in the 40s, under 42, I would say at this particular point, I know it's a sharp move down today, down 4%, down 187 at 44.76. FCX is the symbol. I have this as the leg D that was missing. F/D goes to a D. C goes to a D, and that D, it tells me, okay, so you remember we had this in gold. I said there's a pattern that I look at that a lot of people talking about. They talk about it in textbooks, etc., and it's called this expanding wedge or a flagpole or a flag formation. I like to just look at it as rising highs and lower lows, but most importantly, if I'm able and it makes sense to do it, I grab the outer side, the little V-shaped wedge on the left side, and I turn it into a stalk leg formation. In other words, there's a huge single leg, or it doesn't have to be a single leg, there's a huge move to the upside. It suddenly stalls, and then it starts to make higher highs and higher and lower lows. It does not look like a rectangle at all. Oh, you're in at 37? Okay. Then this is what I'm going to suggest, because this is part of money management. You've gone from 37 to 47. That's a 10-point move. That's 18. That's about an 18-20% move. I would just suggest to you that at 44.70, if you want to just take a little bit off as money management, I'm saying fine. At 44.69 right now, take a little bit of. I would like to give it another couple of days, because you can see this market is choppy, choppy, choppy. It's very selective. You've got some stocks that were just hammered in 2022, which are finally seeing some upside. Freeport McMoran is in the copper area, and if you look at copper, you'll see that it's going sideways. I drew the rectangle in from that peak F. It's going sideways. Normally the sideways pattern at some point tries to break above, but if it takes out the left side support level in the rectangle base, it can go quite a bit lower, and then it tries to get back, say goodbye to everybody, because it's also so tense. It'll get back to the 14.18 area and then go back further. So I'm saying in this holding pattern, let's just look at this, go to this crazy one, TGB. TGB's had a spectacular move. It also went to this peak D, and now it's sort of stalling. There's the Seiko Mines, it's only $1.78, but it had a fantastic move from the 120 area to almost 190. So they're all doing, they're just in a holding pattern. Okay, so the question is, should I do? So let me go to the other one, which will be FCX. Oh, SCCO. There we go. I believe, yep, SCCO. Same thing. They've all done the same thing. Yes, I'm going to say what I said before. I'm going to suggest that you take a little money off as money management. I would put it back for a short-term trade. If it comes back to the 43s, does not take out the low that was made 3 days ago at 42.70 on FCX, but if it holds 43.20 and then it starts to move up, I'd put that back as a trade. And as it moves up, I'd raise the stop, because it probably could stall. What you need to see in Freeport McMoran and the other copper areas is new recovery highs. Whatever the highs were just this past week, you want to break them to the upside. And right now, from the candle that I'm looking at, the weekly is also suggesting that it's probably a sideways action. I do have it going to a leg D in the monthly chart at some point above the peak C that was made, and that was with a high back in April, May of last year in the 51.85, 51.99, 51.85 in the 51s. And it should go to 52, and that'll be leg D in the monthly chart. Hope that helps you. I'll be right back. Basil Chapman sitting in for the Hour of Steve.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We have drawn in this big arch formation, same as we did earlier on. This is a Chapman Wave Roman candle at 8:30 this morning, right here in the 1-minute chart of the E-mini. The rule of thumb is that it closes about a half to 2/3 of the way from the long wick bottom, and then if the next bar or sometimes I give it 2 bars, sometimes even 3. But if within that period it starts to trade in a shorter period of time, since the 1-minute bar, I'd even use it just as a 1-minute bar, at under 4,042.75, there's a good chance it would go all the way to the bottom. But if it starts to close above that high of the wick in 2 bars, that's really positive. This took about 1, 2, 3, 4, 5, 6, 7 bars, and it started to go above that wick. But it did that, and it went to, in Chapman Wave, we're looking always at 4 higher peaks: peak A, peak B, peak C, peak D. This has got nothing to do with A to B equals C to D. This is counting the higher peaks, alphabetizing them all the way to G. But the objective is to get you from a buy signal to a buy mode, meaning it should go to at least a D. It can go higher, but D is what you're looking for. And I like to join the channels. It's just easy stuff to do. You don't even have to do it. I could do the naked chart. And, I won't do it now. But in the meantime, it went to a second peak D right there. If you measure the left side high at about 932 and then 937 or something, you'll see that the technicals were way weaker, and it gave you that sharp pullback below the support level of that channel line, and it comes all the way down. And what I had been drawing right from that turn down there was that there should be what is done so often before. If you take a very important peak on the left side and you draw a Chapman Wave inside wedge target support line, and you get a plumb line in the middle, you can take it. I did this originally, then I thought maybe it'll take longer, so I moved it a little bit, but I put the X in, but the X should have been based on that, and it came in a little later. Sorry, the X was a little later. There's the X. That's what I had nothing there, remember? It was over here that I started drawing it as it made the arch, dreaded H pattern, failure pattern. I thought, okay, let's draw that in, because we've seen givebacks of huge moves up over the last 2 days. Let me just go to the 10-minute chart right here. For those of you who were listening to my show yesterday, I said, gee, I wonder if there's any chance that we're getting we're going to get a two-click session where that crossover and the 9 period, the 9 period over the 14 period in the 10-minute chart can hold all the way through. Well, it held all the way through from right here at 30, and it's called a 4,000 in the S&P, all the way to where it crossed negative. The first time it crossed negative was right there at 4:40 this morning. Is that, am I right? Yeah, 4:40 this morning. It went negative, and that was up at the 40-40 level, 4,000 to 40-40. But at any point, I said, these are two-click session is a day trade. You click it in the morning and then click it sometime in the afternoon. Are we about to see a reverse to the downside two-click? I don't want to get into that. I just want to say that look what happened here. It continued and it went to peak E right there. And for those of you counting Chapman Wave, remember you can't miss anything. That was a peak A. I had a question about that. That little niche there was a peak A, gray peak A, then a gray peak B, and then a pullback, and then a leg C as everything crossed positive. And now it's pink. The 9-period moving average is negative, and it's staying negative. So I'm just saying this is a consolidation session. I just wanted to show it to you in real life. I drawn this in before the show, before Steve's show. I was drawing this in during my show, and I drew this and I said, here's your Chapman Wave inside wedge, target, support line. I usually make it a dashed red line or a pink line, but in this case, I didn't have time, so I just kept it. And look what happened. We made the arch formation, and I said I like to usually I can take it from peak E, but I usually take it from the trough of the cup failure pattern. That would have extended it further. But if I just did it from that peak E, you had a price time match right here. Look at that. It's 3 bars late. And it went right to the X that I put in there. So I like to do that. I've been doing it for a little while now as a practice for trying to develop a technique that I can teach that is the two-click session. I don't always get it right. In fact, yesterday I got the exact, just about off the low at 75, 4,000, was it 4,000? 3,000. I can't remember what it was. It was 75, I know that. Let me just go back. And I had to get out early because of a number of reasons. But yeah, and that would have, was that yesterday? That's today. That was yesterday. So that was 30, that was the low right there. 39.75, right there, 39.75. And they got out a little too early. But isn't that interesting? I mean, the two-click session, and that saves you, you either get it right or you get it wrong, and you have a tight stop. And if you get it right, it's great because you just watch it, and the price moves along the 9 or whatever moving average or whatever you're using as a technique. SSRM, if I have time. Oh, hi, Peaky, haven't seen you in a little while. SSRM. Oh, wrong thing. ESH23. Let's go back to that there, and we'll go back. That was a mistake. Sorry, wrong window. Let's just get that back. Okay. Now what we've got is we're going to go back to here. Actually, if you don't mind, I'm going to, since this is an educational day, tomorrow's usually Technical Friday, but I'm going to make this. I've begun doing this. You know, I talk about a phantom peak. It took me years to discover how to find a method, boy, years and a lot of money, to find a way of using it. So I've used this for decades, but very, very seldom. If I get a move that looks very strong, but it misses going to a C just by a fraction, like here, you see this B at 4,035, 75, was it? 4,038. It pulls back, the MACD's moving up, stochastic's moving up, the 9 hasn't crossed positive, and then what does it do? It bounces, and it goes to exactly 4,038.00. What I do every once in a while, I say, you know what? I don't want to miss this move. I want to count it as if it was a peak C. And then what I do is I put in a C, and I make it red to say, hey, this is the addendum to the Chapman Wave methodology. Don't try this at home unless you're really used to the technique. And it means that when I get here, it's like my peak C1, C2, I'm already out, or I would at least raise the stop. I'm ready for anything, because that peak D with the stochastic going over 80% just for a brief moment and back down is a really negative thing. The 9 is still good. The back D was still good. The only clue I had was the on-balance volume turned down, and that the stochastic very quickly, and that would have confirmed for me that that could be a peak D. And what does it do? It comes all the way back in an arch formation, right? All the way back. And that arch formation retests the left side low so far successfully. And that's what we're seeing here today. A lot of whoopee going nowhere. We're stuck in a range for now. Dow's down 65, S&P's up 2. Basil Chapman sitting in for the hour of Steve Rhodes. I know it's not Steve Rhodes' show, but I'm doing my best. I'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yeah, so let me just go to this right now. We've got questions have come in. So let's see. Stock ENPH, I am long. So ENPH is Enphase Energy Inc. They do energy, battery, solar microinverters, energy storage, EV charging stations, primarily for residential clients. But this is the most important thing. I remember the CEO being on with Kramer. I don't see why I don't have it written in here. And I written down stuff that he was saying. It had just started moving down, and everybody was just enamored and doing the right thing, blah blah blah. And I'm looking at the chart and I say, gee, this is that V-shaped formation with the MACD in the weekly chart weaker than it was at the high that was made back in around about August in the 320s. We went to just under 340 or just touched 340. And I watched it, and I haven't actually looked at it for a little while. And here it is from that 340 high at peak D in the daily chart, trading at 206. I would say that 340 to 206, 38%. This is a bit of a decline, I would say. So the question came in, I am long. I don't know where you're long from. I would like to know that because the low was made yesterday. And maybe you just got in. And if you just got in, I'm going to treat it that you've said you're long. And just because you've sent it in, my guess is that you just got in. 201.68 was the low yesterday. The low today is 203.61. The high is 214.49, but it's down 4 from today from yesterday's close at 206.23. I would be really careful. This is in what would have been the sexy area: solar, microinverters, battery energy storage, EV charging stations. Everybody's talking about Tesla did. I don't know why the administration or no one has given Musk so much credit for being the innovator in electric, pure electric. There was no gas at all. Electric. Not only that, he built the stations. I've got a friend who's grandfathered in. Actually, is a grandfathered in with his Tesla to be able to get free energy all right, you can go to California on like $40 or something like that. Anyway, so they've done everything right from what it sounds like, but it's everything wrong in the stock. I would not mess with it. Here it's almost like UNG. I would rather wait for it to substantially give me a kind of a base that I can look at. If you're in for a trade, and you're in, let's just say, I'm only going to guess. If it was yesterday, let's just say you waited for a little bit of a bounce, you're in at 204. And here it is at 206.24. I am just going to say, I would put a stop, even though today's the day that probably you should widen the stop. I'm going to say because of this, remember the pattern we were looking at in the E-mini? It's the same thing. I'm looking at this, and if I was to draw a left side, right side, kind of a Chapman wave, inside wedge, target, support line, I'd draw it like this, and I'd say, you know what? If this stock cannot hold the low of yesterday, there's a chance that it goes down to the root, to the base. First of all, of the week of the 29th of July, which is 207.16, and if it takes it out, which it actually has taken it out, I have to go to the next one, which is 199.61. Those are the support levels I'd look at, and I'd even say, you know what, if I was to do a left side, right side price time match, this bar symmetry, I'd go from here to here, and then I'd go click, change that from pink to green. So here we are, pink, right there. And this is the week. This is exactly the week that it should be holding, and if it doesn't, you have to go to the next lower low. So yes, I'd keep a very tight stop, but I would also do this. If you are successful and tomorrow or on Monday, without taking out the low of 201 something? 201.68. So should I say that if you got in yesterday, then I'm sure that you must have at least a 4-point stop. So you know what? Because the on-balance volume is so oversold, because the stochastic is it looks like the UNG chart, but the MACD is a little bit better. Whatever stop you had yesterday, I did two things. One is it hasn't worked today because it's pulling back sharply. So out of your position, I'd maybe make it a little smaller, then I can widen the stop, and then I'd make it a 4-point stop from your entry point. But if by the end of the day, if by the end of the day it's trading at 207.90 or higher, maybe tomorrow's the day that it fills the gap and it actually tries to hit to the 224. It sounds like craziness. 224 level, which is a 9-period exponential moving average over the next 3-4 days. That's what you want to see, because you've seen big spikes when it's done it a couple of times, not many times, but you have. Okay, I hope that helps you. But on a weekly basis, I would say treat it as just an experimental trade. And if it works out, you can start to add to the position. This is exactly the week and the price that it should be doing it. This is Enphase Energy. And I wish I typed in all the stuff that was being there, written in. I always do that with CEOs when I have a chance, if I actually hear it. I don't have it on during the day, but in the evening. So I don't. But look at the move down. I mean, that was a miss, right? Next question came in, which is Charles. Basil, I love your show and enjoy your humor and how you actually try to help people. My question is the S&P trend line. We are at the top of the trend line now. What sign are you waiting for to get out and wait for a better lower entry? Okay. So, Charles, thank you very much. I'm just going to do this. Let me show you something very interesting. We're talking about trend lines. I'm going to put this up because I've already spoken it in my show. You've got 200-period exponential moving average support at 39.93. It's been a magnet for the price for months. Look at this, going all the way back to right there. For the first time, it ran up to the 200-period moving average in November. And that's where I said I'm starting to get a little cautious here because that 200-period moving average could be a real fulcrum as it goes up and down, maybe a rectangle formation, which it did. Then it broke down. Now it's making this cup formation. The cup formation says that the 4100.96 high of the 13th of December is in fact a focal point for two reasons. One is now it keeps hitting the 200-period moving average and attempting to have prices move and hold above. It's the first time it's done that. That's a positive. The MACD is good. The 9 is way over the 14. The stochastic is nice at 89%. On balance volume is my clue to say we're not there yet for that big move to the breakout to the upside, but the relative strength here at about, I'm just guessing, is at about, 61% is good. So in that particular instance, I'm talking about the 200-period moving average as being a magnet. It's got to become a propellant, just like this inside track. Let me just move this over so you can see it better. Yeah. So from 48.18.62 back in January, the 4th, I think it was, 4th or 5th of last year, we made the high at a peak G in the weekly chart, and we made lower lows and lower highs, and then finally at 34.91 in October, we had a really good move up, and it went to peak A, peak B, peak C. That's already using up too many peaks to get to the same distance that it had before. But now it's forming the cup formation, and the 9 did finally cross over the 14. But I want to see on Friday a nice close above that. This is at 4 o'clock, above the trend line, and certainly going into next week, which is on Tuesday, we wrap up the month. I want to see that monthly chart at least attempting to get towards the 4100. Because why? It says that maybe in February we break to the upside and start a leg B. So I hope that helps you just get the sense of what I'm getting. It all just gets pummeled if there's a closing of 38.85.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Mike, I can't remember. Did I finish SSRM? SSR Mining Group? I don't think so. So SSRM. That's right. This showed up on my work as well some time ago. SSRM, there it is. I'd done all the work, little doji candle at the low, and this is called SSR Mining Group. I don't know what mining they do, but it went to a D, pulls back, and then starts a brand new peak A, B, C, and it's in leg D right now. And that kind of corresponds with what I'm looking at in many of the gold stocks. It's not like I'm getting, oh my God, you got to go short. I'm saying I think that gold is starting to bump into some kind of resistance. It's been happening over the last kind of 2 weeks with modestly higher highs, not in some stocks, but in gold itself and the GDX. Oh, I need to do this. So, I had a question right here. So this is the question came in. Basil, in a number of miners, AU, SILV, HL, BTG, CDE, BVN, NG, since late September, gold hit 1850 and reversed today. Looks like it may want to go down to the 1880 area. My target for the GDX has been 34, where I plan to exit the leverage I was using and about half of the original positions. What are your thoughts? So this is a fabulous question. It's kind of a question that I've kind of offered as, how can I put it, as a kind of a metaphor for a sector that independently, besides what everyone is talking about, has moved higher and had very minor pullbacks, but it's all been within a beautiful contained price channel. And you can see that with SSR mining. And if you look at the on-balance volume, it is overbought. The MACD is now lower than it was. If you're looking at the relative strength has started to pull back. Stochastic's under 80% at 78%. But there's nothing wrong with the chart. It's just to say on a purely technical basis, Steve, I'm using that as just a kind of a benchmark for your question, because I've done the same thing. I've looked at, did I miss that? Wait a minute. I think I did that. That low was, there it is. Okay, so that low at 1286 on the week of the 30th of September was retested at 1284. Yep, I knew there was a fraction. There was a reason why I started peak A right there. You have to wait for the lowest low bar. So this has gone to leg B, peak B. Now it's a leg C, confirmed last week as a peak C. And today we've gone to leg D. So all of these things are suggesting just money management. Now, when you say you had a methodology, Steve, I'm not going to mess with that one bit. That is yours. You were the one that got in. You were the one that has garnered the profits correctly. You've done everything that you wanted to do. You spoke about the GDX. Let me show you the GDX right now. It made an alternative count G/C yesterday because today's a lower low. It doesn't have to make that leg D. All I'm saying is that there's a chance that that was an instant restart. The MACD is still good. The I always have this in the background here. This is a CCI. This one gave you a sell signal way back. I can't remember now why I even have it on the background. I've had it on the background for ages. The stochastic is at 92%. The on-balance volume is a tad overbought, and on each one of these overbought levels, look what it did. Only once on this particular, right at peak F at 32.75 on the 13th of January, did it pull back fairly sharply. Whoa, it went from 32.58 to 31.20 or something like that. And now look at it, it's up here. So, and it's achieved everything. Look at my left side, right side price time match. This is the symmetry that I look at for bar symmetry. And we went to, this is the week of the bar that I expected. There should be a test of this high that was made the week of the 3rd of June. So all I can say is that everything has been accomplished, but that doesn't mean to say, oh my God, everything's accomplished, I'm getting out. I think exactly what you said. You had a plan. I would moderate the plan just a little bit. And the reason is, look at the dollar. The dollar's sitting there. It's so anxious. It's made of the comparable thing, G/C on the downside in the chart wave notation, goes to a D very often. At 101.50, we are testing, was 101.50 today. We are testing to the month, to the week, the June 101.30 low to today's low. So all I can say is that if the dollar is going to move, it's going to be quite quickly. And I don't know why it will move. If I look at the EU. Let me first go to the USD JPY. So that's the yen. You'll see the yen has done exactly the same thing, except it didn't go, it got real close, but it didn't hit the May low of 126.362. It screamed up to that peak E, but that's lopsided. I chose this long-legged leg D candle as my midpoint, the plumb line for the price time match. That's called bar symmetry. And this is the week that it should, last week was the week it should have done it. And it went down to 127.22, about a point off the low of 7 months ago, right? Or 8 months ago. So to me, that's great symmetry, and it's starting to bounce off it. And that just says this rectangle formation that I make it a little narrow right now. This rectangle formation that we've got in the euro, in the dollar yen, says that there's a chance it's starting to make higher highs and higher lows. And if it starts from 130.44 right now, up 85 cents, if it can get to 132, kind of in the high, that the bar that I'm actually looking at is that ugly bar of the 12th of January that started off at 132.51 and it went down to 128.87, closed at 1. So this is it, the high of 132.51. That would be my target, but I like to go step by step. My first target has to be this little one 4 days ago, or 131.11. If by Monday we start overnight, Sunday night, if there's just something that goes on, and I got a feeling there's some things that are going to shake the market up from a completely different perspective, just momentarily, just, even if it's like yesterday, a pullback and then a rally, just to keep shaking it up in this range to sort out which stocks in a sieve are holding like whatever kernels are holding and what falls through. That's going to be important. So I'm watching that. And if you go to the EUR/USD, the euro, you'll see that's made a leg F today, just barely. And it's a red candle, big deal. It's not a big deal until the euro starts to close under the 14-period moving average of 1.08, but it won't, the 9 won't go under the 14-period until 1.073 is hit. So this is a process. Think of it as a process. So I'm going to just give a sum up as we return to that whole question about gold. I don't know about getting rid of everything. I just whittle a little bit. I'll talk about it when we return.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Fabulous Traders Edge show. I did a bunch of other things. I just wanted to do a couple of things as we're wrapping up here. I'll be back tomorrow at my usual time at 10 o'clock. And check out my opening call, my daily newsletter. And remember, these techniques that I'm showing here on the E-mini, look at this. You could, at any time of the day, you could be out, and you come back in, you wait for a signal, and then you just trade that signal for minutes, or it could be the whole day. It could be the 10-minute chart and you do the whole day, or it could be just minutes. And I wanted to show you, I drew in the rectangle to say we could stay in this rectangle formation. I was going to do this. I'll do that right now. That in the Chapman methodology, there are patterns that I look at like this, where straight up, straight down, cup formation, arch formation, or a combination. This is the dreaded H. If you take out that left side low, you can go a lot low. If it holds, other things can happen. You can go into an M-shaped formation where you have a second arch. Lo and behold, this is what I was going to talk about, and I forgot. We got to the second arch, and I spoke about the phantom peak. You don't have to use the phantom peak. Look, if that went to the C, it never took out the left side low. Taking it out negates the whole pattern altogether. You have to start over. But this would have kept it, and that would have been a D and an E. Instead, I got this. The pattern I was talking about was the phantom peak. I usually use peak C1, C2. That's what you've got here, and in the rectangle formation. So this is a great technique. You can do it anytime, day, monthly, weekly, minute by minute. I love it. And it just keeps, it's exciting because the challenge is always there to use your mind. And that's what I like. So let me just wrap it up here. I'm going to just do one more chart. Is in the Chapman methodology, we try to identify the lowest low bar and count each successively peak, A, B, C, D, E, F, G. On the way up, alphabetically, it's at D, the fourth highest peak, that other things can happen. So lo and behold, We went to a D and then a very quick E in the 10-minute chart and then plunged sharply. Anyway, the question came in about the gold. I'm not going to mess. You've got a beautiful plan, and I'm not going to mess with that in terms of just the question that you asked. It's well put. You've analyzed it very well. So I'm going to say to you, in terms of the gold, I would, right here is what your plan. Start taking something off. If you ask my opinion, and you did ask that, I would start taking off a little bit here. And if there's a little bit further of a drop, I'd have another portion of that. I would try just for the moment to keep as much as possible. Why? Because there's no guarantee yet that you're going to pull back. But the next 3 days, it'll be really important. But I don't.